Economic analysts predict that Nigeria's inflation rates will range between 25 and 30% by the end of 2025, despite recent rebasing rather. Now, while inflationary pressures are expected to persist in the first half of the year, questions arise regarding the validity of the 15% inflation assumption in the 2025 budget and the impact of these figures on consumer experiences. As the Monetary Policy Committee convenes, there is growing debate on whether to hold interest rates steady or implement further adjustments. But then by the time we will be having some sort of inclination to the direction of the MPC between Thursday and Friday. Of course, we'll have a clarity on that, but then we can still talk about this even as we have Daniel Efa, who is the Senior Business Development Manager at Purim Africa, join us to talk about this. Thank you so much for joining us, Mr. Efa.
Thank you very much. Thank you very much for having me. Good morning.
All right, yeah, you're welcome. Now, economic analysts and industry experts still anticipate that Nigeria's inflation rate will moderate between 27 and 30%, despite rebasing. For them, inflationary pressures will still persist in the first half of 2025. But then do you align with these sentiments?
I think I would tilt towards disagreeing a bit. Why? Because I feel that we've gotten to a point of our peak when it comes to consistent rise in prices. So I'm tilting towards the disinflationary era in the first 2 quarters of the year. Inflation is not expected to move at the same pace, 2.53% it was doing all across 2024, because then when you look at the macroeconomic issues, those issues have stabilized. We're looking at petroleum prices, which is a fallback of oil prices. Oil prices would not do that kind of numbers. Petrol prices is stabilizing in the sense that we now have a structure on who are the sellers you get. So that particular stability. They talk about the currency also. We are seeing consistent decline. We are seeing stability, less volatility in that area. So for me, what we would be seeing is disinflation, right, for the first and second quarter of 2025.
Now, where would you place year-end estimates now? Let's do an overview of that. And what are the key pointer and key determinants for you?
So like I said, we now have a more robust and stable upstream sector. So in terms of in the oil sector, in terms of prices, right? We know the role petroleum prices play in our economy in terms of the volatility it brings to the CPI basket as a whole. So with the stability we are seeing, right, oil prices would definitely range around $70 to $73 per barrel all through the year. So that will mean that we will still be able to maintain 1,900 you get for petroleum prices. So that alone we get are the pointers. We're also looking at currencies. We are, based on our analysis right now, we are seeing a upper limit of maybe 1,650, 1,700 for naira to the dollar, right, and a lower limit of about maybe 1,300. So when you look at those pointers, which is usually the major issues when it comes to what influences our CPI basket, then we should be heading towards with the rebasing, we should be heading towards maybe 22, 21, 20% at the end of the year in terms of inflationary pressure, of inflationary figures coming from our MBS and what it will look like to the economy, basically.
Does it mean that you are projecting stability in oil production and in the forex market? Because we've seen a bit of volatility, of course, in the international market, that would affect the price of crude. And we've also seen a bit of fluctuations in the naira in terms of today it would appreciate, tomorrow it depreciates. We don't have that. So that kind of negates what it seems as though you are talking about in terms of stability. I'd like to get clarity on that.
Yeah. Okay. So when I mean stability in the currency space, right, in the oil sector, it is not in the stable prices. It is in the level of volatility of those prices, right? So you don't want, there's nothing bad. Currency prices or price of assets or instruments will always move, right? But it is in the stability of the movement. So you don't want a price of a particular instrument to do 5% today, upward movement, 10% tomorrow, downward movement. You want a steady movement. And that is what we've seen. For example, this year, we've ranged between 1,550 and 1,4 something. You get consistently over the course of about 30, 40 trading days. And that is basically what that's what we've been clamoring for when it comes to our currency conversations, when in terms of whatever the CBN is doing. When it go also to crude, right? Apart from January, where we had over 10, 15 trading days of bearish movement, right? In the last couple of days, we've seen a consolidation and a consistent range you get. So even if you're going to be seeing any major move from crude at the moment, there's a likelihood it's going to be to the downside, which is what most analysts have identified in terms of the pressure from all settings. You get there'll be a likelihood that ocean crisis will end. You get there's a likelihood that Donald Trump will pump more oil. So those things are what is what do you call it now, is informing that particular projections. And when it comes to us, in terms of our crude oil production, we'll most likely ramp up production this year. So those pointers should give us a level of stability which we would need for proper planning, and in terms of data that we need to help us for going into 2026. Because 2025, for me, I'm seeing it as that year where we would consolidate in terms of all the previous volatile movements we've had on majority of our macroeconomic pointers.
Well, I must say that you're quite optimistic looking at the submissions you're given. But I understand. Now, we know that 2025 budget assumption placed inflation rate at 15%. That's what the government has said, to reduce it to about 15%. So aggregating all you've said so far, would you say that this actually validates the latest figures released by the NBS?
15% is high, right, in terms of expectation. The rebasing, I don't know if there is an internal knowledge about what the rebasing figure would be when these projections was made, but I don't think you should base your activity or expectation on just on a rebasing. It should be based on your direct input into ensuring prices go down, right? One of the major issues that, apart from the fact that we are working towards stabilizing the oil sector, stabilizing the currency issues, it is still conversation around food, for example. What are the things we deliberately do? So if we can work on the components of headline inflation, right, which is the non-core component, which is energy and food, you can work on those figures in terms of bringing them down, because based on what we have right now, non-core is looking at is looking around food, for example, is around 26 based on the new rebasing. So if we can be targeting 15% just for food, right, this is achievable, right? But if it is for the headline inflation, it is likely not this year in terms of because what you would need is a consistent 2 to 3% decline, right? Consistent 2 to 3% decline for at least 10 months for you to get to that 15%, and that is a very big call based on the fact that we are expecting an era of disinflation first before we now look at deflation happening in the economy.
But I thought it is actually food inflation that influences head inflation more. So if you're saying that is achievable, looking at food inflation for 15%,
yes,
and that influences the overall inflation, how would that be achieved?
Yes, so this is the thing. So food inflation, right, is a component of the headline, right? So we have the core inflation, then the headline, which is you're not adding food and oil and energy, right? Energy is still there. You can't bring down energy cost except we suddenly go back and push subsidies and push prices back to 190. We can't do that. So food is the only direct impact that we can make that would ripple effect on the other. So even if you bring food down to that number, it would not still guarantee, you get, based on the calculations now, because the rebasing has reduced the weight of food, right? So, but you can achieve food in terms of the overall economic impact it will have on the Nigerian people, right? Which is something Nigerians would prefer, right? At the end of the day. So when you do that, yes, you can get closer, right? Maybe to even 20%, 19%, but 15% that was projected is almost unlikely this year.
All right. Well, CPI, of course, we understand is key data that informs MPC decision, and we know that by Thursday, Friday, there's going to be the 299th meeting. We'll be expecting an announcement to be made soon in terms of interest rates. We understand that the Center for the Promotion of Private Enterprise has called on the MPC to halt increases in the rates. So I'm wondering if you would also align with that call. Would you say that it's time for us to hold the rates, or maybe it's too soon after rebasing?
So funny enough, we might be seeing maybe 100 basis point reduction. I'm just trying to be to maybe have a crystal ball or something. I think that we might be seeing 100 basis point reduction, because right now we are about 2.22 or thereabout, or 2.2 something in terms of positive real interest rates, right? Based on the fact that 27.5% is the interest rate, the last interest rate increase, and now with the rebasing we have 24%. So there's a likelihood that we might see a marginal, maybe 100 basis points decrease in interest rates, considering the fact that the rebasing and the MPC has shown us that they are going to be taking a very hawkish stand based on what we've seen so far. But if there's a likelihood that we will all agree to the era of this inflation, right? Even though I would have loved the MBS to have rebased at least 2-3 months preceding January, right? To give the MPC proper data of what of if there is an actual disinflation era commencing from late last year. But now we really have January as the rebased figure, which is not enough, right, to really make a decision. But I'm still tilting towards a 75 to 100 basis point reduction, basically.
Okay, we'll wait and see what the MPC will come up with, of course,
exactly.
When the meeting commences on Thursday down to Friday. But then let's be, a bit realistic, break it down, see how it reflects on consumers and the ordinary Nigerian. Now, are these figures reflective of consumers' experience? When we go to the markets, do we see that reflection in terms of general prices, goods and services declining when we do a comparison of 34.8% that we saw in December? And of course, the fact that we are looking at a projection for a further decline.
Okay, so I think that it's important that ordinary Nigerians, particularly listening to business shows like this, need to understand something, that these are indexes. This would not necessarily mean that if the price of spaghetti moves from 1,500 to 2,000, it will necessarily impact directly by that same percentage on a basket, right? The basket is a large one and it is a weighted basket. So when I was talking about this inflation earlier, I'm not saying prices will naturally come down. I'm saying prices will go up, but not at the same rate it was going up previously. So that is what we would have, right? 24% is not, it doesn't reflect anything. It doesn't reflect the real life scenarios. But what we are saying is that even though I still have issues with some of these rebasing components, but the fact is that prices is not moving at the same rate it was 12 months ago. That is the conversation, right? Are prices still going up? Yes, they are, and that is why I usually say that unlike in the global north, you get the US and co. Whenever data like this comes out, you see someone from government coming to talk about the fact that we are seeing the issues and this is how we want to solve the problems, right? So unlike us, where this data just come out and it's left for us to just interpret the way we want, again, nobody's going to be telling us what is the policy decision, what is the policy activities trying to curb these issues, right? So this is still where we are, but prices this data doesn't reflect right, in terms of real conversations, but it is just an overview. It's not meant to be perfect, but it's an overview. And let's just see what happens consistently from the following month. We cannot completely distrust the data because it is just a calculation based on existing prices. You can't tilt towards the extreme sides in the conversation around data. But that's why I said earlier that it would have made sense if NBS also had rebased October, November, December, right, to help us in terms of analyzing the data in January, right? So it gives a better conversation to it, right? But now that we have January as the first rebased month, we see how the data would flow at the end of the day. No matter, even if you tell me data inflation is 5%, as long as on the streets prices are still going up, Nigerians will tell you it is not not reflective. But
definitely.
Yeah.
Definitely.
Yes.
Of course, we understand that we are data-driven, but then if we say that the data is not efficient or is not comprehensive enough and is not reflective in what operates in the physical markets, then what are we saying? Daniel F., Senior Business Development Manager at Perima Africa, thank you so much for sharing your thoughts with us on the show.
Thank you for having me.